This is Justin Pulitzer. This is my weekend review video for Sunday, August 2nd, 2015. I can't believe it's already August. This year has been going by so fast. Anyway, let's jump in. There's a lot to cover. Usually I start off my videos on SPY, but I'm starting off here on the dollar. And that's because the dollar has been really... it poses a lot of risk to the equity markets in the sense that it would start to unwind some of the currency carry trades. I don't want to get too into that. It's a little bit beyond the scope of these videos. But it also hurts commodities, gold, oil, copper. All of these commodities are priced in dollars. And you can see here that we have a bit of an equal low. I think it might even be a slightly higher low here than the last. And we're starting here to make some higher highs, and it's starting to risk breaking out of this channel and retesting the old highs and possibly puncturing to get to some larger fib retracements from the long decline that the dollar had been in. I do believe a break of 100 would get like up to the 61.8, which is 102, and potentially a 1.618 fib retracement up to even to 105s, 104s or 105s. And that would cause a lot of trouble for oil and such. But I just want to show you that the dollar here is key. If the dollar does wind up rolling over here and breaking this double low, I would say that the top for the dollar is in, and it would be kind of Miller time for the commodity trade. That would kind of get it back in gear. Just to show you some of the damage the dollar has done. Also the slowing of the global economy, i.e. in China, India, basically BRIC, Brazil, Russia, India, and China, you can see that copper has been in a down channel, and it's now within a downtrend of a down channel. It's starting to get a little steep. We are currently hovering a little bit below the last lows, which to me is vulnerable. Anything below there could see the channel low a little bit lower in copper. Same thing could be said for crude oil. We kind of got a low, rallied up, stalled out here with poor highs, and then broke down, and we're kind of retesting. I've been saying that this area in here, like these 45s, 46s, are going to be really key for oil. If it can bounce off of there, I would say that the low might be in. And I've been talking about Exxon in particular, which had some pretty crappy results on Friday. You can see it had looked like it was looking to put in a low. We had closed up here strong at roughly around 83, and I had said that the key here was 83 and then to clear 86s, but we instead decided to come back down, and the low here was 78.97. We took that out slightly but closed above it. This low here on Monday is going to be key. Anything below there to me is still a little bit more vulnerable. If you can clear the Exxon high of day here of this 81.63, we should fill the gap fairly quickly and then maybe go higher. But this is looking a little bit vulnerable to me as long as the commodity itself is vulnerable. Gold, same kind of story, looking like it wants to roll over. It's been in a down channel. There is a lower end of a larger channel down at the 78.6 fib retracement. This was an old breakout high, so I believe that the low in gold is going to come. There could be a right or right out trade at 144 or potentially down to 91s. I do think that put spreads or put ratios down into this area will be golden, so to speak. Let's go over to SPY. Okay, so here we go. We made a higher low here in the S&P, which is good, and we are coming back up. We have broken over the 50-day and have held it now. Here we punctured it slightly to retest the 100, and then we held it on Friday, even with the weakness, and we closed here around 210. So the key to the market here are the 210s. If we can hold 210 or higher, I do think the all-time highs and potentially a blow-off top type scenario could be in play. If we lose the 110s, then I would think the market is a little bit more vulnerable. We'll probably want to come back down and retest into here and maybe even lower. If that happens, it would not be good. The key here really is to clear this 213.18 to make a higher high on this leg. We'll see if that happens, but the key to the kingdom here, in my opinion, is holding 210. Anything below there is more vulnerable. Anything there or higher is more productive. The IWM is starting to form a little bit of a down channel. We have a lower high, we have a lower lows, we held a trend. I had said that last weekend that I thought that we could come down and retest this 220.97 with potential give to 119.39, and the low here was 119.34, so we got pretty close, so that level worked. We did bounce up, and look where the rally stopped though. Look where this box is, where the distribution here begins, to the tick. So if IWM rolls over here a bit, things in the general broad market could get a little bit more squirrely, given that we kind of checked back to where the volume. If we wind up just going sideways and then punching through, then I would say the market probably will want to run back up and retest the high, considering we tested the lower end of range. But I am a little bit concerned with IWM. It's acting a little bit iffy. Qs looking a lot better than the rest. I had said we would we had a lot of support down in these different lower regions. They all have held. As long as Qs are above 111.16, it's kind of hunky-dory. Anything below there gets a little bit more iffy. We had a 50-day MA hold, so this is sort of the line in the sand. If we start retesting down here rather quickly, I'm thinking it's maybe a little bit softer. One of the things that has me a little bit concerned with the Qs is Apple. I've been saying that 122 was a really key level. That was the low here, at least regular RTH 121.99. So basically 120 it had to be above there, so 122. Anything below this low is more vulnerable. We're currently coming into the 200. That's key, but the real key, if we're below 122, the real key is going to be this 119.22. If we retest there, which was the after hours low here, and it holds, there could be a bounce. That's a good area for a right or right out type of trade. If this breaks, I think that there is a short to be had to the 114.86 and potentially even down to the gap fill of 109.03. I will be playing for that on a snap. I'll probably do put spreads or a put ratio, particularly a put spread if IV is low. So it wouldn't be a very expensive bet, and that to me would be IV of below 25. And that's how I see Apple. If we can hold there and bounce back up, then I would think that we will probably at some point fill this gap here to 130.75-ish roughly. Probably, maybe even just up to 130. Let's just say that's the number, 129.85 to 130, which was, as we all know, the addition to the S&P 500 high. Anything I believe below 129.5 is, or sorry, 129.85. I've been saying is more vulnerable, and anything below there has proven to be more vulnerable. So that's my thinking. Google has been a bit of a disappointment, I would say, for the bulls here. I had a couple of stop outs here I had discussed last time. You had 1, 2, 3, 4 days that held above, and then it just kind of came back. Makes sense. I mean, the stock ran up $50 and then another $100. I guess it's giving back about half or so. I would say the first line in the sand here is these 57s, the 44s, and potentially even down to the 15s. I do believe that somewhere between the 605s and the 615s would be the low on a move lower to kind of long up and play for a bounce back up if it does even get that low. Facebook reported, and in true Facebook style, before we go into true Facebook style on pulling back after earnings, like it has done for a while now, you can see here it ran up and then pulled back. A lot of this move here was on the back of Google, and I think Facebook used up a lot of its rally on Google's numbers, and it got really close to the 100. I would say 99.24 was kind of close enough for government work. So my thinking here is that the numbers were good. I'm still bullish on Facebook. I just think it's possible that it pulls back to retest some of these breakout areas, potentially 89s, maybe 88s. To me, the more healthy pullback would be to get all of these weekend chasing mofos out of the stock, let the stock come down somewhere between 85 and the 83 area, which was the true breakout. It might be a little bit too much. I don't know if we're going to see that low. My guess is 85s would be fairly solid support since we topped out roughly there. We held here. I think that this area will be significant support. It's also a 61.8 Fibonacci retracement. So I think somewhere between 88s and 85s should probably hold the stock. That's where I'll be looking to kind of re-up, so to speak. The opposite before we go on to Twitter, if we can clear and stay over this high of day, we sort of started to do it and we filled the gap here on Friday. If anything above this 95.81 to 96.33 should be off to the races to the old high and beyond. So those are the levels. If you can clear the earnings gap, the earnings day, high of day, and kind of this tail here, then I think the move is higher. Twitter, piece of JUNK. I said that this was going to be a binary trade either to 45s or to 29s, and it looks like we're going to get the 29s. So 29.51 was the old low in the way back machine, back this way. I don't really want to extend the chart, just take my word for it. If you look it up, that was the old all-time low. Right or right out here. If you're caught long, this is the spot to kind of double up for a trade for a bounce for higher, to kind of play for a bounce to kind of lower your cost. Or if you break here, just GTFO of the entire position. It's in no man's land. Wait until they kind of have more of a clear plan. I think that their management has been an embarrassment, so to speak. They lost Costello, Jack Dorsey, looks like Tom Hanks in Castaway coming out with the beard, although he trimmed it a little bit. And they need to really show that their earnings numbers were great. I'll give them that. Their numbers were pretty good. The problem is they have no growth, and they have a growth multiple. And until they can show that they have growth, it's going to be very hard to justify the multiple. Also, it is very hard to play for a takeover in a stock when the fundamentals are deteriorating, and no growth in a growth stock in social media is a problem. So that's it. I don't really want to go much more into it, but that is the story. VIX, kind of kissing the canvas lows down here. I would say if you're longed up and you're nervous, you probably want to start buying some protection, maybe some puts or put spreads or whatever in the S&P against your longs. It's a good area that traditionally the lower range of volatility supports, and we wind up pulling back up. So it is possible we do make some kind of new low or just kind of hovers around, but I would say the risk reward here is probably for higher IV than lower IV if I had to bet my money. TLT, I've been discussing. I thought 123s. It did it almost here, but wound up doing it here, close, 122.90. Anything above 123 is going to have my recession radar up. Thinking, I shouldn't say really up, but kind of waking up, and then having a move potentially up here for the gap fill up to 127s. If we do get up this high, I believe that the recession talk will be in full swing, and there should be recession talk, frankly. This is a good time to talk some Fed, right? If you want to hear more about it, check out my Periscope. The link will be in the description below from this past Friday. I think I did a pretty good job with that. But the issue with the Fed is that they are well below their 2% inflation target. They said jobs gains in their commentary were quote-unquote solid, but we know that the employment cost index, there was no wage growth. It was 2.2% or something, and that is the lowest since the recovery started, if that's really what you want to call it. They also kind of discussed a little considerable time, that the economy is kind of expanding moderately, but with the commodities crashing and the revisions down in the GDP numbers, they had revised the first quarter up from minus 0.2% to, I think, positive 0.6% or something, which is still pretty junky. But they also lowered the GDP mean for the last 3 years from 2.3 down to 2.1%, which is a pretty big revision, and there's more to come. So for the prior years. So I don't really see how the Fed is kind of running out of time with data. If they're going to raise, they're going to do it in a news conference event, and that would be September. If they raise the 1/4 point, they're probably going to be like pretty pleased with sugar on top. We're just kind of showing. But why would they do that? This to me is just TV talking head nonsense. It would make zero sense. If anything, they should be cutting and talking about more QE. If anything, the economy is far from good. The GDP is stall speed. The percentage of Americans working, which is the labor participation rate, is the lowest since 1978. Yeah, it may up or down tick a point here and there. I mean, like 0.1 or whatever. It's ridiculous. The economy is not on sound footing. Commodities are crashing. I showed you those charts of oil and copper. There's no inflation. The bonds are telling you that interest rates are going lower. If this does wind up, this to me, if you don't believe that and you're a bear, this is a bond bear up against the 123 here, or whatever this high here was. What was this? 123.56. That's your right or right out stop out for some type of a rollover back to mid range, maybe to 118s or 117s. I believe 117 is a pretty important pivotal strike. I've discussed that with regard to TLT. So we may, if you may want to play for a check back to 120, or maybe even to like the 119s. If you're a bear here, you could probably do it with a put spread if you want to minimize the risk. China. It's kind of stopped with the kind of crash mode, although here was a really big move down. I think people were getting all excited about an 8% move down. I think I said we all knew at some point we were going to have to first, at the very least, make a higher low. We seem to be trying to do that here. I don't know that we're not going to retest the low or even come lower. I think China's in some trouble with their growth and their markets, but they're going to start shooting people over there, frankly, for short selling. It's not like the USA. It's a communist state that is run basically by the military for all intents and purposes, and they are doing their damnedest to get the market back up. I may be the only one talking about this. Everyone's been talking about 1929 style moves in the market there. Yeah, you might get the continued rollover, but I would be surprised if we don't see a lower high on a separate leg first. So there might be some type of rollover, move higher, then roll over again. But wouldn't shock me, as crazy as it sounds, to be talking about Fibonacci extensions at some point beyond up here. But let's cross that bridge when we get to it. BABA, piece of you-know-what. I had been saying that this low here was key, and I've been saying 80s were a key hold. We flirted below there, we kind of held, and now it's rolling over again. I don't really know what to tell you. It would be probably better for the stock if it just completely flushes out ahead of the print like it did here. You can see it came down here, and then it did one of these. Maybe we get that kind of shake and bake again, but in my opinion, this probably shouldn't have been down here again so quickly. But let's see if it plays true to form. If you can get above 81.70, I guess the play would be to the channel high here, which would be close to 84s, 85s. We'll see where it is at the time. But stock is one of the absolute hardest, frustrating things I've ever seen. BIDU, also kind of junky, was down into the print and then gapped even lower still. I guess it will now have some resistance somewhere in the 180s and the 186 area. That's sort of where this breakdown really occurred. Yeah, I mean, maybe if the market really firms up, you see the 190s, like the 190s again, 188s, 190s. That's really where these lows and this volume distribution kind of picks up. But this was pretty weak, and China has been fairly weak. So if you're playing for a bounce, these fibs here should be your targets. I mean, I don't even know if we make it there. The high here was 72.81. Anything below there is iffy, and we closed 72.66 on Friday. So a little bit more uncertainty there. Amazon, what can I say? It's a horse. Gapped up. They sold the bejesus out of it, but it's kind of just been holding up high and tight. It would not shock me to see some type of further retracement up into here, but it's a little bit hard of a chase, in my opinion, considering you do have kind of a secure high in here. I would say that if you do get some type of a move back lower, maybe to retest into this range here, somewhere between 452 and 439. That would be the good right or right out play for a bounce if there's some type of a move lower. It got the fib extension here that I was looking for, and all of this here should be just gravy for you. So if you've been long for a while, congrats, but don't be too greedy. I took this one out of the chart last week. I got a lot of flack for it. I'll put it back in, looking a little double top-ish in this amberella. You need to take these highs. I mean, if anything below there to me is a little bit more vulnerable. If you get some type of a pullback, you know, you don't really want to break in here. If you start breaking in here, then a double top is confirmed. You know, you had a pretty big breakdown so far. Technically, it's done everything correct. It stopped just shy of the 61.8. It rechecked the old high. It's pulling back. So if you do take these highs, then it's going to be off to the races for still higher. If not, you know, the risk is a little bit lower. I am not enamored with GoPro. I don't believe in the company or the stock longer term. That said, it got above the 54.06. We tested below. It's back above. You did get into a bit of a range low where this had kind of started to break down. I would say that 67s, somewhere between 64s and 67s is the place to kind of book some profits. Maybe it gets to the 75s. I don't know. I guess that will depend a little bit on the market. But, you know, I'm probably not the right guy to talk to about GoPro. I'm not a fan. I kind of equate it to the old flip camera that Cisco paid $600 million for and then shortly wound up closing. Chipotle. I had discussed that this was going to be a kind of put up or shut up area in here, and I had said that I thought that the risk was oddly even here to the upside. It's documented in a video. Go back and listen to it. I thought we would fill the gap. I have not had the best or worst record with Chipotle, I should say. I've had some pretty big wins, but I've had some I got trounced a couple of years ago on this when it had that 100-point gap to the downside. I had been playing this with like a strangle, and it wound up gapping through the lower strike. And it wound up being a bit of a problem. So I don't really play this stock on earnings, although I do play for continuation plays. And look, above this high, obviously the risk is still higher. I believe that this stock is benefiting from the low oil and gas prices, as do most restaurants. So as long as you have that kind of scenario, same with Royal Caribbean, these stocks are the ultimate plays on low oil and gas. Maybe even take a look at Cheesecake Factory if that thing has some pullbacks. FireEye, I've been saying I was a little bit cautious. People were asking me in here. I said that I thought that I wanted to see higher highs. It was starting to make lower highs, lower lows. We kind of held into the range where we needed to on this pullback. Any type of further pullback into this area, this chop zone, like these lows here, the lower 40s, I will start probably selling some out of the money puts, like maybe 36 or 39 strikes. I believe that the wind is at these companies' backs. The only issue with FireEye, their quarter was good. It's that their CFO is leaving, so that might be a little bit iffy, cautionary. You know, we are here below the channel, so I am a little bit cautionary with FireEye. Palo Alto, I am not as cautionary with. Not Pawn. This is almost like Pawn, forget Pawn, this is like chart porn. But we got a little extended. The 50-day, as you can see here on multiple occasions, has been the spot. We stopped just shy of it here. Maybe it sets up here for some type of a right or right out trade at like in the 78s for a bounce at the very least for a day trade. I would love if this stock would just really come in and give us an opportunity to get into it much lower. But it has been the horse. This is sort of the gold standard of the cybersecurity stocks. JetBlue, I discussed I had booked some profits in. I did it really well. I believe it was like up in here, somewhere in the 23s. I did say that I thought we could see the 1.618 fib extension up here, the 24.92, but because of my position that I was in, call spread, I needed to kind of book it, and we did come down a bit here. The earnings, I think, were fairly okay. They were slightly below, but JetBlue to me is the best chart out of all of these kind of air carriers. So the fibs here are what's key. Is if it could chop sideways and work off some of the kind of excess, I think it will be a playback to the upside, given even the strength in Expedia. I'll talk about that a little bit later with Priceline, but I think JetBlue is the sort of, if you have to play an airline, JetBlue is the one to do. Netflix, I've been waiting for this to pull back a little bit more. It wound up having its own ideas. Still a horse, still bullish. If you're long, just stick with it. You could use this 103.88 as your stop if you don't want to even risk that much. I would say anything below this, like 108, 109. What was the low here? 109.32. So you could use that as your stop if you're long. Seems to me fairly reasonable. If you want to give it a little bit more, 107.68. That's really the more traditional low, considering that's the earning gap range. I probably wouldn't give it that much if I was buying it up here in the 114s, which I am not. But down here, I would be a little bit. I do think the stock, by the way, will probably still go higher. I don't see why they wouldn't. So if you're long, just stick with it. If you want to play it now, it's a little bit late in the game. I would say defined risk. Call spreads would be the only thing that I would endorse in there. Let's do Expedia first. Expedia, I've been saying that this was the most clean chart. I've said this, I've been on record for a while that I prefer Expedia over Priceline. I think it's a really, really well-run business. They kind of have a really great app. I use them personally. I've found them to be very reliable. The only issue I would say, and the reason why I think they're doing better, is that when they come up in search results, they're always cheaper because they don't include the taxes in on their pricing. Priceline is a more all-in status, so that's why Expedia has probably been taking business, because they've been kind of telling the truth but telling it slant. That said, Priceline did run a bit on this Expedia news. It's been a really choppy, consolidative pattern for a while. We are back above the channel, which to me is good. We did kind of get close to filling this gap here. They are going to be re-reporting this week on the 5th. The deal with Priceline is going to be a little bit tricky. It's supposed to be an $80 expected market maker move, which means if you're long common, you're either going to be rich or you're going to be shining some shoes at Grand Central. So I would say defined risk, hedge at the very least. My guess is, given Expedia, that this would want to come up and retest, higher, but maybe not. Maybe it wants to come back down. I'm always a little bit cautious. I really wish that they would have been kind of like in this pattern before they reported, rather than have already done this move up. But my guess would be, given Expedia, they should probably be up. I mean, Expedia was pretty good earnings. So Priceline is a similar company. It didn't really get too crazy here. It did have a bit of a pullback. Stock technically looks okay. Don't love that we filled up here, although I do like that we pulled back, and now are back up here. So I'm thinking bullish on Priceline. I might eat my hat on that next week. If they do wind up being a bust, the range low here in the 111s will be in play, and maybe even still lower, although I'm not really anticipating that unless the market really kind of falls out of bed. If you want to play this, if the IV is pretty high, play over 2 standard deviations out of the money. So you'd be looking to play like $160 out of the money or so for selling, if you want to sell some naked premium, or I would say premium spreads. At this point, the stock is too expensive. I mean, it could be career ending if you don't have a large enough account. I'd be a little bit cautious. So anyway, I think higher, but I would do it with spreads. Let's end on Tesla. That's one that everyone loves, right? They also have earnings coming up. This did have a large run, had the pullback, ran up, now pulling back again, starting to make some lower lows off some lower highs, which feels a little bit more iffy. 265 is really the key. If you've been in it for a while, you probably want to book some profits. I do believe we're going to, at some point, see these 291s and the... which was the old all-time high, and then some of these Fibonacci extensions, potentially up to 359, which is the 1.618 Fib extension. They do have the Model X coming out. Their Powerwall seems to be doing well. I'm fairly bullish on Tesla. I would be doing this with defined risk. If you're going to be short puts, you don't want to be anything. You want to be down here really in the 220s to like 225, as this was sort of the breakout area. If these are the puts you want to be short, if you want to do it with call spreads. The risk reward there to me would be fairly decently skewed to the upside. If it does wind up coming back down, you could always sell some puts into some weakness to make up for that. Anyhow, that's my story. I'm sticking with it. If you're not following me, my Twitter handle is @JustinPulitzer. Be sure to also hit the subscribe button below. I post these videos. I also post the Periscope rebroadcasts, as well as some special edition videos. I have some new ones of those that I'm working on that should be pretty phenomenal. So hit the thumbs up. Please like the video. Give me some comments. Subscribe. And we will see how the week goes. Anyway, cheers.